We'll go ahead and bring the hearing to order. Ranking member is detained, and we have permission from her to go ahead and get started this afternoon. We do have votes at
2:30 to 2:45.
2:30, so we should be in pretty good shape when it comes to that. And I would like to say good afternoon to everybody. At today's hearing, we're going to hear about the President's proposed fiscal year 2014 budget for the Small Business Administration, and I'd like to welcome Administrator Karen Mills back to the committee, obviously for probably her last testimony, unfortunately. Small business owners have to balance their books every single year, and if necessary, that includes eliminating unnecessary costs. In contrast, and despite a federal deficit of $16 trillion, the SBA in its budget proposal makes no effort to eliminate wasteful and overlapping programs that would contribute to reducing that federal deficit. But given the deficit, you might think that the SBA would find ways to cut back. Instead, the agency has requested nearly $57 million in new funding for new entrepreneurial programs. And by contrast, the SBA only asked for $4 million to increase the number of procurement center and commercial marketing representatives. Last year, this committee moved legislation, ultimately signed into law, which enhances the authority and responsibilities of those SBA employees. And given these new responsibilities, as well as their long track record of helping small businesses get federal contracting dollars and creating jobs, it makes sense for the agency to make a more significant investment than the 34 new hires offered in the budget. The agency has initiatives in the budget to increase the availability of loans to small businesses, certainly a very worthwhile goal. At the same time, the SBA is reducing resources that would be devoted to the loan management accounting system. The system that tracks the agency's $100 billion loan portfolio is an information technology project the Deputy Administrator stated was a top priority of the agency. And given the agency's management problems and lender oversight, this proposal to increase loans and cut back on loan management tools puts taxpayers at a little bit greater risk. To summarize, the SBA offers a budget that is long on its priorities but seriously underfunds the proven programs that Congress has designed and ignores some longstanding management deficits. But with that, we'll move past the ranking member's statement. I'm sure she's got a statement. Okay. And we'll just go ahead and move to Administrator Mills. And again, thank you for being here today.
Well, thank you very much, Chairman Graves and Ranking Member Velasquez and the members of the committee. I'm very pleased to be testifying before you today. I want to start by thanking this committee for its ongoing support of the SBA and America's 28 million small businesses and entrepreneurs. The President's 2014 budget is focused on job creation and accelerating our economic growth. We know where American jobs come from. Half of all working Americans either own or work for a small business, and these businesses create 2 out of every 3 net new private sector jobs in the United States. The 2014 budget makes strategic investments in America's small businesses. It fills the remaining gaps in the market, particularly for small dollar loans, while supporting proven programs that fuel job creation, new business formation, and American innovation. These are critical to a full and robust economic recovery. And it's important to note that due to decreased subsidy cost for our 7A loan program, the SBA's 2014 budget reflects a savings of $109 million from our 2012 budget. 4 years ago, when I first appeared before this committee, small businesses were struggling in the face of one of the worst economic environments since the Great Depression. At the SBA, we rolled up our sleeves and we went to work. We eliminated fees, streamlined programs, and in some cases took more than 100 pages of paperwork out of loan products. The results have been significant, including 2 record years in 2011 and 2012 of delivering over $30 billion in loan guarantees. Our 2014 budget builds on these efforts. 3 key initiatives are the elimination of fees for borrowers and lenders for all 7A loans under $150,000, an extension of the 504 refinance program, and SBA 1, which creates a single application for all 7A loans and allows borrowers to more easily complete lending forms. The 2014 budget also invests in SBA's powerful counseling and mentoring network. These investments focus on the types of small businesses that are best positioned for job creation, expanding firms and startups. Expanding firms created 8.7 million jobs between March 2011 and March 2012. The budget requests $40 million for an intensive business leadership program that provides the skills training to help more of these established business owners successfully scale their operations and create more jobs. The program is built as a private-public partnership that allows us to maximize its reach. The other area poised for growth is startups. These businesses punch above their weight when it comes to job creation. At the SBA, we've had our third consecutive record-breaking year for our Small Business Investment Company program. And the 2014 budget allows us to further support startups through targeted tools such as growth accelerators and clusters. We also know that for both established firms and startups, the opportunity to sell to the federal government can be a game changer. As a result of our efforts in the last 3 years of reporting, small businesses have accessed $32 billion more in contracts than the previous 3 years, even as overall contract spending decreased during those years. We continue to take a zero-tolerance stand on fraud, waste, and abuse in federal contracting to make sure small businesses are the ones getting these contracts. And we've instituted programs like Quick Pay to make sure they get paid more quickly. Our 2014 budget will continue this emphasis on contracting by putting more resources known as procurement center representatives in the field. Our research shows that 32 new PCRs proposed in the budget can influence approximately $7 billion in small business contracting. Today, thanks to agency-wide efforts and the support of Congress, small businesses are interacting with a different SBA, one that is more customer-focused, more data-driven, and more transparent. On a personal note, this is likely the last time I'll be testifying before this committee. It's been an honor and a privilege to work with you over the past 4 years, and once again, I'd like to say thank you.
Thank you very much. And we're going to move right over to questions now. Mr. Benvolio first.
Thank you very, very much, Mr. Chairman. Mrs. Mills, thank you for your service and your leadership. And I thank everyone at the Small Business Administration for the hard work toward getting our economy rolling again. I apologize that I only have a few minutes here to ask what appear to be ongoing issues with the Small Business Administration, not about what's working well. And you can submit your responses in writing 14 calendar days or less. And I'll give my questions after I read them to the clerk, and they'll give you a copy. First question, how many times has the SBA overhauled the design and links on its website in the past 4 years? What was the total cost of these overhauls? Number two, how much did the SBA spend to create the RFP EZ website, and how much does the SBA spend to maintain the website? And according to the budget justification, SBA 1, the agency's new initiative to improve the electronic application process and its loan programs, will use commercial off-the-shelf software. How will the SBA integrate that with its COBOL-based loan management accounting system? And fourth question, the SBA budget for fiscal year 14 reduces $2 million from the budget to modernize the loan management accounting system, but requests $7 million for SBA 1. Do you think it is wise to take on new information technology initiatives when the LMAS program is still based on COBOL? And thank you, and I appreciate any elaboration you can provide in a written response. And to hear about COBOL for the first time in decades, since the 70s, I think, it was a bit of a shock to me. And I think it says a lot about the information technology problems at the SBA. Thank you very much, and I yield back.
All right, we'll go to Mr. Murphy.
Thank you, Mr. Chairman, and thank you for being here. You outlined in your opening statement some of the new programs that you're laying out, the entrepreneurship education, the growth accelerators. We had a presentation by GAO, and I think we've probably all read the studies on some of the duplication, some of the overlap that we have in some of these programs. I think there were 52 that they outlined. just curious on the reasoning for these two new programs when we have so many already out there, and why not to focus on improving what we have?
As you know, our entrepreneurial development programs are a key part of the SBA. And across the entire SBA resource partner network, we've made some important accomplishments in order to what we call link, leverage, and align those programs on the ground to make sure we're giving taxpayers the best bang for the buck and eliminating any duplication. That has been progress on that has been substantial, and with that success, we have noticed that there are some gaps in the market. As I explained earlier, this budget is focused on job creation. There are two major sources of job creation: expansion of existing firms that have new opportunities, perhaps in government contracting, perhaps in exports, and those firms need to be able to have the skills resident in the leadership to take advantage of those opportunities. Our intensive entrepreneurial education program proposed here is like a mini MBA. It is missing in the marketplace, but it will be delivered through the existing network that is out there. It does not...
And you said it's a P3, correct?
Pardon?
You said it's a public-private partnership?
And it's a public-private partnership so that we generally, which is what we generally do, in order to give taxpayers the best bang for their buck.
And so is it based on something that we've seen proven to work on one of these already existing programs, just expanding it?
Yes, it is based on proven programs that work. Kaufman Fast Track, Goldman Sachs 10,000 Small Businesses, the SBA's E200, all share a 9-month intensive curriculum. We are pulling best practices from all of these areas, and there are metrics behind each one.
What will your plans be to track them and their performance?
Well, we are a metrics-driven organization, and we are building at every stage the metrics that involve what's the success rate of small business that graduate. We already track that for some of our existing programs, and we know that after this curriculum, some small businesses increase their sales. One I talked to last week from Baltimore said they doubled their sales in the first week, in the first year out. In addition, they create more jobs, and we also measure how much additional financing they get.
You said some do that. You confident over 50% or so? Or
yes, the metrics are very good. We'd be happy to share them with you.
Okay, yeah, I'd love to see that. One last question. It looks like you're cutting the SBDC and SCORE of 9% and 7% respectively. How are you cutting that? What's the what are you going at there? Is there some waste, some fraud you've identified, or is it just simply funding?
Well, first of all, this is not an either-or proposal. This is a both-and. The SBDCs are an integral part of delivering the intensive entrepreneurial experience. So the funding from that will flow down to those who deliver the programs, which will be our resource partners. So this is a way to measure outcomes, make sure there's consistency, deliver best practices, fill a gap in the marketplace, and still use our existing resource partners to deliver the program.
Great. All right. Thank you. Thank you, Mr. Chairman.
Mr. Mulvaney.
Thank you, Mr. Chairman. Thank you, Ms. Mills. Let's stay on this Emerging Leaders program for a little bit, because I'm a little confused. You talked about the metrics that you're using. I think you mentioned that sales and jobs would be some of those metrics, which makes perfect sense. But how is that different from the existing programs that you already have? How is it different, those metrics different from the Kaufman Fast Track program and the Next Level program, for example? Aren't those also designed to help small businesses increase sales and employ more people?
This intensive entrepreneurship program is the Kaufman Fast Track program, the Goldman Sachs 10,000 Small Business, and the current E200 program pulled together with best practices. These programs differ from the mentoring.
And I'm sorry to cut you off, but are the other ones going away if these are pulled together?
Right now, these other programs don't exist across many of the smaller marketplaces, and we have worked with those partners who do not have the capacity to serve rural areas. We're in 27 cities now. Goldman Sachs is in 9, and we want to make sure that we reach more entrepreneurs in more of these places that don't have access to an intensive entrepreneurship experience like a mini MBA.
And I understand that, and I represent a rural district. I guess my question is, if we're having difficulty providing those services to the rural areas, for example, under the existing programs, why do we think our experience will be different with this new program?
The existing programs, such as the Small Business Development Centers and SCORE, provide absolutely fantastic services, but they're different. One of the things we do with SCORE is we do one-on-one mentoring. In our Small Business Development Centers, we have an extraordinary record of long-term client counseling with very, very good results. But there's still a gap for that medium-sized business that, in the small category, it's still a small business, that needs to grow 20 employees, needs to take its sales up to the next level. The gap is that the entrepreneur does not have the skills to take that business to the next level. This is a 9-month program which meets every 2 weeks. It creates kind of a mini forum, like a YPO forum, among the CEOs that are in that forum. They create a specific business plan for their own company and then get prepared to execute it. They learn financial planning and analysis. They find out where they're making their money. And I would invite you to come to one of the graduations or one of the classes, because you will hear specifically how they could not have grown their businesses without this type of program. These very often were clients of SCORE or of our Small Business Development Center, but they had an opportunity to dramatically change and improve their business and grow. They needed a more intensive experience.
And I'm a big fan of the SBDCs. In fact, I think we've been to see some with some of my fellow colleagues across the aisle all over the country. You're reducing funding for those in this budget request, though, and that's sort of that's where I'm caught up. I hear what you're saying, and I've got issues about whether or not we're going well beyond your authority in doing this. Are we actually getting in the school business? The SBDCs make sense to me. It's a place I can go as a small business person and get mentored, and that's great. I see value in that, and certainly the market doesn't necessarily always provide that, but the market provides exactly what you're talking about. But let's stay on the first topic, which is, tell me about the $8 million reduction in the request for SBDCs, which is, how is that going to affect their service?
Well, first I want to make sure that this committee understands that all of SBA's programs are conducted under the authority as provided by Congress. So we do not have any unauthorized programs. And this program is not a new bricks and mortar program. It is conducted through our on-the-ground resources, including our small business development centers. So these funds will find their way to those small business development centers who participate, as most of them do, in implementing these programs in their cities.
Thank you. You back the balance of my time.
Mr. Schrager.
Thank you, Mr. Chairman. Well, first, I want to thank you so much, Mr. Mills, for your service. You've been a breath of fresh air in general to this committee and, frankly, to the agency itself. I think there's a newfound sense of mission and purpose, and, frankly, there's a sheriff in town to watch some of these programs that we do have. And you've set a new standard. I think your background in small business as an entrepreneur yourself and venture capitalist, you understand how this should be happening. So I appreciate that. I'm going to miss you personally, so good luck moving forward. Having said that, this wouldn't be a small business hearing if we didn't talk about some of the programs that we'd want to do maybe slightly differently than you're suggesting. There is this, I think we're all hearing about the SBDC issue. And I think it's important for the committee to understand that under your tutelage, we've shifted a little bit in terms of priorities, maybe not necessarily in terms of programs, but you've been focused a lot on the medium-sized small businesses, if you will, where I think we've had previous testimony that maybe there are a lot of jobs created there. That's, I think your contention has been that's the biggest bang for the buck. But there are many of us that are really worried about, with the recession, a lot of new people starting their own very small business. So the reductions to SBDCs are probably unacceptable to a lot of us, and we hope to find a way to work with you and the administration to maybe ameliorate those and still be able to support those medium-sized small businesses going forward. So a question, to get to a question here, would be you're also looking at decreasing the fees for folks trying to go for $150,000 loans. question on, how do we know that's going to guarantee us some increased uptake by small businesses? I like the idea of more small businesses being able to compete because I'm a small little veterinary clinic. I never had a $200,000 loan. I was taking out, 40, 50, maybe 100,000 at a time. So I'm curious, if you don't know, what are the metrics you're going to gauge the success of the program by?
Well, first of all, thank you very much for your kind words. And I want to make sure you understand in the Small Business Development Centers, it's not an either or, it's a both and. Let me address your question on the 150,000, the loans below 150,000. As you know, the SBA just finished 2 record years at $30 billion, but the loans below 150,000 have not recovered. And the numbers are quite dramatic. Those loans dropped by 2/3 in 2009, and then they stayed flat. They have not come back up. So we need to address getting more loans into the hands of the small businesses in these areas. They are the underserved areas. They're the smaller businesses. They're the earlier stage businesses. And we know we have a proven way to do this because it worked during the Recovery Act. When we eliminated fees during the Recovery Act, we were able to significantly increase both the supply and the demand of loans. And that is, we have very good metrics to measure this, and we will be tracking the number of loans, the dollars of loans, the geography of loans.
Thank you. Second question would be on the yes, certainly. Yield to the chair.
Yes, and let me just take
Hello, Congressman.
one
Yes.
second to really thank you on behalf of the American people and small businesses for your service. But I just would like to ask you, it was the lowering the fee that increased the number of loans, or was that coupled with the guarantee?
It appears, as we have looked back on the lowering of the fees, that the lowering of the fees was an absolutely critical part of increasing demand. Back in the credit crunch, when banks were concerned about their capital, the increased guarantee was also important, but we know that the fees were a really big driver.
But we did notice a drop in the volume when the guarantee expired.
Well, we'll get back to you on the exact numbers on that.
Just thank you, Madam Chair.
Thank you.
Good clarification. The other program that you made some great strides in was the Hub Zone program. There are a lot of people taking advantage of that, and I see the funding for that's decreasing in your budget. Concerned about how that might affect the outcomes that you've been very successful with, I think, so far. So could you comment on why we're decreasing that in that area where there's been rampant fraud and abuse?
Well, first of all, we've had a really intense effort on fraud, waste, and abuse. We aggressively went after large businesses, pretending to be small businesses, people who were saying they were in a hub zone but were not in a hub zone. And we have largely gone through that process of we now
I'm just worried about going forward is my
monitoring. I'm not aware that we are reducing our efforts in that area in any way, so we will be happy to talk further about your concern.
All right. Thank you. And I yield back, Mr. Chair.
Mr. Collins.
Thank you, Mr. Chairman. Administrator Mills, we chatted a little bit. Maybe I just would share with this group a little that 31 years ago I started my first company with an SBA loan. And it's safe to say without that loan, I would never have started that company or got involved with the 20 or so companies subsequent. But, maybe again for the committee's edification, I've been involved for 12 years with something I think very similar to your intensive entrepreneurship leadership training, and I've been a member of YPO for 25 years. What I've found, I think, is what you're talking about, the gap of the person with 25, 30, 40 employees. You'll get a bigger bang for your buck if you can get that person over the hurdle of understanding what his variable margin is, how does he grow, than the true startup. We need both, but the startup is 1 or 2 employees and there's a plateau, and 4 or 5 years later they've still got just a handful of employees. If you want the big push, it's the company with 30 or 40 employees that wants to go to 50 or 60, doesn't know how to get there, and actually does. Now, the program I've been involved in with University of Buffalo, the Center for Entrepreneurial Leadership, and 40 people took place in that. It was a 9-month program like you're talking about. They met once a month, had a mentor assigned to them, but then they developed a business plan with the class. They would present, get their business plan ripped apart from one end to the other, just as a learning thing, but it's like a mini MBA. We charged $5,000 per student at the University of Buffalo. Now, in partnering, is there any thought that the SBA would partner with someone like universities on something like this? Because it is a very worthwhile program.
Yes, absolutely. The model is to partner very often with community colleges and other activity that already exists in that area.
Now, where we charge $5,000 a person to go through that program, would the SBA be subsidizing some part of that, or
Yes.
how would the company president, he's signing up to go through an intensive MBA, if you will, does this help lower that fee in some way?
Yes, this would lower or eliminate the fee, and the reason is that our job is to serve gaps in the market where you have a terrific company, but they may not be in the position to make that investment, or they may not be in a geography where that investment exists.
And I do think, too, that would help. I've been on the recruiting side of recruiting businesses in, because we have 40 businesses a year that go through that program, 20 on Tuesday night and 20 on Thursday night. Sometimes the $5,000, believe it or not, when cash is king, a lot of times the companies that need to go through that are the ones that don't have the cash, and they're trying to convince either their board or their partner. Sometimes it's the second generation that wants to grow the company, and that second generation guy has to convince the father to go spend $5,000 to grow the business, and sometimes it's that dialogue. So I do agree. Just the other comment I'd make is, again, having started a company, paid the SBA fee, at the end of which I was out of money, so I was broke at the day that we closed. Cash is king. Sometimes that small fee, somebody would say, how much is that small fee? It's just enough to keep the company from moving forward, because the banks are bad enough. But I agree with you that anything you can do to reduce the fee, especially on some of these startup loans, is something needed. So thank you for your service. The SBA will always have a soft spot in my heart, since that's how I started my first company. And certainly as your replacement comes in, I think on this committee all of us would just like to be an integral part of your decision-making on some of these programs, because from what I'm sensing is sometimes the communication has not been what it could have been. You're off doing your thing, and I don't think this committee feels they're engaged, and sometimes the best way is just engage us more, and perhaps we'd have more pleasant hearings. Thank you.
Ms. Chu.
I, too, want to thank you, Administrator Mills, for your service. And I wanted to ask about the 504 loan refinance program. I was glad to see that in the President's budget for fiscal year 2014, the SBA has requested that Congress reauthorize this program. I know that bankers and small business owners in my area have given this program very, very positive reviews. And I have introduced the CREAD Act, the Commercial Real Estate and Economic Development Act, which would extend this program. Can you share with the committee the purpose of the 504 debt refinancing mechanism and how it helps small businesses? And also, can you share with us the performance of the existing debt refinancing portfolio and how you would characterize that performance?
Mm-hmm. The 504 refi program, as you know, ended last September when the Small Business Jobs Act expired. But the program was extremely successful. It had 2,700 loans valued over $2.5 billion, and we had 200 banks participating in the program. We know that demand still exists in the marketplace because interest rates are low, and many small businesses have equity value in their real estate that they want to unlock by refinancing their debt. But conventional financing is not available. The 504 refi program allows them to refinance their debt and then take that money and use it for their equity and use it in their business. We know that on the last day of the program in 2012, we had over 400 projects pending and about $500 million that didn't get funded. And we do know that this program will operate in the future at zero subsidy based on the fact that we can charge an adjusted fee at the agency to cover projected costs.
And the performance of the portfolio?
Yes, the portfolio is very, very early. It's had very few, almost no defaults, but it's very early, and it's only a year out.
So just to be clear, the portfolio of these loans have not cost the taxpayers any money?
At this moment, the portfolio is very new, so it has not really, matured or come to fruition. So it has not.
Okay. Very good. I wanted to follow up on the SBA 7A loan guarantee program, and I was interested in your effort to increase these loans of smaller size, the 7A loan program. This program has been very good for small businesses to obtain financing when they haven't been able to find other sufficient credit from normal lending channels. Now, you have proposed waiving fees, and although this could save borrowers a couple of $100s, there would be more significant savings for the very small businesses if there was a lower interest rate on these smaller loans. So I would like to know, in what ways could the SBA reduce interest rates on these smaller size loans versus lowering the fees?
The SBA has the authority to set fees, but the interest rates are set by the banks. So these are public-private partnerships. Banks see the loans. They determine whether they can do them without a guarantee. If they determine that they would not be able to do it and they ask for an SBA guarantee, then it will be at the rate that the bank sets.
Okay. Well, I would also like to add my voice to the chorus of people that are very concerned about the decrease in the SBDC funding. I am very concerned because it looks like it could amount to a reduction of $10 million. And yet there are some proposals for pilot programs, for instance, one called Operation Boots to Businesses. It seems that it's similar to those services provided by the Veteran Business Outreach Centers and the Small Business Development Centers. So could you please explain to me how it would be different from that, and also what effect would there be for the current SBDCs in terms of closings, reduction in hours, or employee layoffs?
First, the Boots to Business program is completely different from the services provided by the veteran centers. Boots to Business is targeted at our returning veterans. It is service members, while they are still in the service at their bases, in the Marines, in the Army, in the Air Force, as part of the TAPS program, which is the Transition Assistance Program, to make sure these returning service members are able to have a path forward when they come back after giving this country their service. Many of them want to go back to school. Many of them want to get a job, but some of them want to go back to an entrepreneurial business or start an entrepreneurial business. And that track is covered by the SBA under Boots to Business. It will be delivered by our small business development centers. So the funding in the Boots to Business line will flow through to those small business development centers. That is why this does not constitute a cut in small business development centers. What we have done is take the platform, the integrated resource partner platform that collaborates on the ground in absolutely extraordinary ways, and with discussion with them. In fact, we are piloting this now in a number of bases with the Marines and the Navy and the Army. The small business development centers are very excited to serve our veterans in this way, and with this funding, they will receive cash flow to pay for their efforts.
Thank you. I yield back.
Herrera Butler.
Thank you, Mr. Chairman. And thank you for joining us again, Director Mills. I wanted to ask two questions, well, two different issues. One is about hub zones, but first I want to ask about the Natural Resources Sales Assistance Program. I have a number of smaller timber producers in my region who've actually specifically come to me about this, and with concern. So three parts to that question. I want to know if the SBA is engaging with the Forest Service and ensuring that there will be a set-aside for small timber mills. Also, is the SBA ensuring that the Forest Service is complying with the terms of the interagency agreement? I asked the IG about this in a different hearing a few weeks ago, and I couldn't get an answer. And then lastly, I've heard from some constituents that the SBA has been using firewood and wild mushroom sales to fulfill the requirements for the timber set-aside. Please tell me that's not true.
Well, first of all, the Natural Resource Sales Assistance Program is something the SBA is fully committed to. And as you clearly know, it is a program that allows a set-aside for small timber mills. Mm-hmm. And having been to small timber mills, is actually in Arkansas, not in your area, and had many conversations with them, I want to reassure you that we are working very closely with the Department of Agriculture, which is the Forest Service, on this issue. We have many conversations with them. I will get back to you on the firewood and wild mushroom issues and whether they qualify and are eligible.
Well, I'm pretty sure they do not qualify under the intent of Congress, which you were talking about, the authority we've granted. It wasn't for timber sales or excuse me, firewood sales or wild mushroom sales. It is for timber set-asides for these small guys. So I very much, and we will provide you with the specific information about these cases, but it's pretty much Washington State wide. I mean, it's mills from all over, so it's an area of concern that we would like someone to look specifically in on.
Yes, so we'll absolutely follow up.
Great. And then the other question was about hub zones specifically. And I know people are talking about the dollar amounts. The numbers that I have for FY12, actually they're SBA numbers, approximately 1,175 hub zone applications were withdrawn. And that's nearly twice the amount that were approved and nearly 4 times as many as were declined. And I know you talked about cracking down, so I assume that's part of that number. I would be surprised if that's that much of that number, but I'd like to hear your thoughts on that, because I have 3 instances in a hub zone that we keep coming back to you, and each time you help, but I'm not sure this is how this is supposed to work. One of them was one of my business owners, and this is the same area, was out of town. So basically, they turn in the information, they wait 5 weeks, and then they get someone, a specialist, calls them and says, you have 10 days to get us supplemental information. Well, in one instance, a guy's out of town on vacation, so he has to withdraw and start over. On another instance, the business owner is only given 72 hours to provide the supplemental information. Had to withdraw and start over. And just yesterday, the hub zone application, happened again. Somebody turned in information in February and hasn't heard back. And I appreciate the help with these individual instances, but I'm starting to wonder what's going on. Maybe, I don't know if it's the region, but was hoping maybe you could speak to at least some of the numbers. I'm wondering if the numbers have something to do with that. I mean, I don't know if it's fair to say we're withdrawing and you get to count. Are they withdrawing because there's a frustration because something's not being timely, or is this isolated?
Well, first of all, we have cracked down on eligibility, and this was a very important push. That said, we would very much like to follow up on any of these specific instances. We want to make sure that our applicants have every opportunity to comply and to join the program. We are looking for great hub zone companies to be part of the program, so we will do everything we can to service them.
Well, we'll provide you the information again. Hopefully I don't have to every time come to you with one of these, because obviously I don't want to waste your time. So thank you. Thank you, Mr. Chairman. I yield back my 0 seconds.
Schneider.
Thank you, and thank you, Administrator Mills, for your service. As a new member, I'm sorry we won't have the chance to work together, but knowing that small businesses do represent half the employment and two-thirds of the new job creation, it's critical that we continue to foster the spirit of enterprise and pursue the entrepreneurial opportunities in this country to get the economy growing. I represent Illinois. It's the northern suburbs of Chicago. We've suffered extensively from flooding throughout the region in the last several days. Some of the areas that I visited this past weekend to see the impact, it's not just homes, but it's also businesses that are underwater are going to have a hard time picking up in some of the resort areas. As the season starts, they're losing their opportunities in a very limited window to achieve what they need to this year. And at the same time, we're having the impact, obviously, of sequester. So my initial question is, what impact do you see sequester having as we help these businesses who are just starting to assess the impact of the floods on their future?
Well, we are absolutely ready to come aid in the event of this disaster. The process is that the governor would ask for a disaster declaration, and we would declare it, and we would be on the ground immediately thereafter. We have a 2,000-person ready reserve. We are finishing a really intensive set of operations around Hurricane Sandy, of course, but we are prepared and ready to come in, and flood season, tornado season, hurricane season is coming. We are ready to serve.
Will the sequester limit your ability? I mean, these businesses, these families are just now seeing the waters recede. They're receding slowly until we have the full assessment of the impact of the damage. The governor can't make his request, but to them it's already been a long time, and I want to make sure once we do make the request, we get people there as soon as possible.
We will be able to be there without a problem. We did take sequester cuts, but we do have a force ready to come in.
Okay. My second question, you talked about it's not being either or, but both and. And I want to give you the opportunity. It's critical that we expand and understand the priorities for small businesses. I ran a 10-person company with a partner. I had the opportunity to be part of a advisory group through a group then called Tech, now Vistage, and that was an ongoing relationship that helped me understand and deal with some of the challenges we faced over the years I ran that business. As you're doing this both and working with startups, working with growing companies, how are you going to place your priorities? How do we make sure that we're not shortchanging one versus the other?
Thank you for bringing us back to the startup community, because they are equally strong in job creation. And in fact, in recent years, the startup rate in the United States has gone down quite a bit. And one of the important requests in this budget is a program for jobs, for small business startup accelerators. All across this country, accelerators are springing up. They're kind of the evolution of incubators, where small businesses can get access to mentors and networks and capital. We have convened accelerators all around the country. We see that we think in a competitive fashion we can accelerate the access to capital, the access to networks for these small entrepreneurial startups. I was in one in Austin a few weeks ago. We are seeing them come up all around the country. What we would like to do is catalyze best practices and catalyze the availability of these in places outside of traditional startup areas like Silicon Valley, where they might not yet be operating at full force.
I think it's crucial that you have the accelerators that we put in place, multipliers, amplifiers, accelerators for businesses to start and grow. For me, I know throughout my career, my successes have all been related to having mentors along the way. And so I'm worried, I want to make sure we don't cut off that interpersonal relationship. So we have, whether it's SCORE or other programs, mentors to help these businesses not just get started, but to grow and succeed and nurture beyond those first few years.
The reason I say it's both and is many of our startups are Main Street businesses, and our SCORE representatives really spend the bulk of their time at early stage and startup business plans. High-growth companies tend to need a different kind of mentor. Those mentors tend to be gathered around these accelerator networks. Right. That's why we need a both-and approach.
Right. Thank you very much. I yield back my time.
Mr. Holzkamp.
Thank you, Mr. Chairman. Madam Administrator, appreciate you being here. A couple questions I want to follow up on the issue of the $10 million of cuts in the SBDCs versus the expansion of $57 million for a variety of initiatives. In my visits with SBDCs just last week, apparently there's a little confusion. They were not told that there was money that would be flowing through them. They saw the $10 million of cuts. Can you explain what you told them and how that's different from what I'm hearing from you today?
I want to be clear. We have worked through this with the SBDC leadership. We have been working on Boots to Business for a year already, so they are completely involved. They are engaged today with E200, and we value this partnership we have with all our resource partners, particularly the SBDCs, who are one of the core pieces of what we call our bone structure. Now, we understand that traditionally each of these places has operated as a silo, and making sure that, one sees the world in a collaborative fashion is a process. And we understand that the SBDCs are concerned about making sure that they continue to deliver what they are delivering, and we are equally as focused on that. That is why I want to make sure you understand that the request we are making today is the same request that we made in the last budget. So we are making the same dollar request that we did prior. We haven't changed our assessment. And we do value those small business development centers, so we are going to make sure that they have incremental resources, that they are the core recipients, if they choose to be, of delivering Boots to Business and the intensive entrepreneurial experience.
So your budget does or does not cut $10 million from the small business development centers?
To be clear, our budget request is the same budget request the President made last time.
Well, I appreciate budget request. How about current year budget? Actual approved budget, is it a $10 million cut then from the current budget you're operating under?
From the current budget, this request is not at the same level, as you point out, but it would, but it does not include all the dollars that would flow through these absolutely targeted programs that are proven to deliver value, that the small business development centers are already engaged with in a highly productive way. So we are focused on making sure we pick our efforts, we put our efforts against proven programs that deliver results.
Let me get back to the issue of what they have heard and communicated with me, and apparently some other members, is they were not told they were going to get this money and be providing those services. But you're telling the committee now that you believe the new initiatives and the money flowing through would more than cover the $10 million in budget cuts that you proposed?
We have sat down with our partners to talk about these efforts for specifically in the past several weeks, and covered this with their leadership. And we will be happy to continue to communicate about this, to work with our partners to make sure that small business development centers can continue to provide the role that they have.
Are you still proposing changes to the Small Business Act as part of this package?
I don't believe we are.
I'd understood otherwise. So all these programs, the initiatives are currently fully authorized?
Yes, they are fully authorized.
Okay. Lastly, with apparently the lack of communication, and perhaps it's a rural area, and that where the communication hasn't gotten that far when you're 100 miles from your nearest center, maybe 250 miles if you're not using the SBDC. It's pretty hard to avoid a silo approach when you're the only one within a 100-mile radius. How do you address that, and how do I encourage them to continue to offer those services when they see You cut the line item. I mean, you actually cut $10 million out and then say, oh, don't worry, we're going to cover that with these new initiatives.
Well, I also come from a rural area. I come from the great state of Maine. So I have a lot of sympathy for the rural areas.
Let me interrupt. How wide is the state of Maine?
I'll have to get back to you on that.
I'll just tell you, it's not as wide as Kansas. It's not as wide as my district. We're talking 250 miles from the nearest SCORE office, if you weren't using this, to a corner of the district. We're talking 3 or 4 hour drive. And when you put budget figures in there that say, we're going to get $10 million out of the closest office, and then suggest, well, don't worry, we're going to move the money around. I mean, that's a rural area, and that's the concern we're hearing.
Well, as I said, share your concern about rural areas, and I'm happy to address this with your small business development centers in Kansas as well.
Okay, thank you.
Okay, we'll come back. Ms. McLean-Custer.
Thank you, Mr. Chairman, and thank you very much, Administrator Mills. Great to see you. And another New Englander. I'm a new member from New Hampshire, and it is, we consider it rural, but absolutely not as wide as Kansas. So I'll grant that to my colleague. I wanted to mention, have a conversation about women-owned small business. In New Hampshire, 90% of our employers are small business owners. And we have a wonderful relationship with the Small Business Administration and appreciate the loans and the guidance and the mentorships that are provided. But I'd love to get a little more from you, particularly on 2 programs, the Women's Procurement Program and the Women's Business Centers, if you could, just to give us an update. I know the Women's Procurement Program in particular had a rocky, slow start before you came on board, and I'd love to hear what the update is, how we're doing, and whether women-owned businesses have grown during your tenure.
Well, thank you, because I'd like to take a moment to thank the team at the SBA for the progress that we've been able to make on the Women's Procurement Rule. It was passed in the year 2000. It was not implemented, and when we came in, it was proposed to be implemented in almost such a limited way that it would not work at all. Instead, we went back. We were able to implement the procurement rule for over 300 sectors, and I'm very pleased to say that over 13,000 small businesses that are women-owned have uploaded their certification into our registry. In addition, we had a very significant positive development with the passage of the Defense Authorization Act in January, which removed the caps on women-owned business contracting, and we are in the process of implementing all of those regulations at this time. So we are highly focused on women's contracting. We just launched yesterday a program called Challenge Her, which is a partnership with WIP, Women in Public Policy, and American Express to bring more women-owned small businesses into the contracting world and educate them about the opportunities that exist. Our women's business centers, we have over 100, and they are an integral part of all of our activity.
Great, and I'll yield back my time, but thank you for your service.
Would the general lady yield for a little follow-up on women-owned businesses?
Absolutely.
Thank you.
Happy to.
I'm glad you brought that up. The Women's Caucus will be sending a letter specifically on contract sizes, the caps. As you know, on January 2nd, the President signed legislation removing the cap size of the contracts that may be set for the women-owned businesses set aside. However, they're still in place 4 months later. And I wanted to see if you could give us an update on that, because this is obviously something we'd like to see happen. It's something Congress finally agreed on and the President signed. Where are we at with that?
It's a top priority for us. As I said, this is an absolutely terrific development, and we've made it a top priority in the regulatory process. So we are moving that through. the regulatory process, and it is moving as one of our #1 priorities.
So it's out at final
rulemaking.
rule? Where is it in the rulemaking?
Happy to get back to you on that. I believe it's at OMB.
Okay, thank you. Thank you for the time.
But we'll find out.
Absolutely. Thank you very much. And once again, thank you, Administrator Mills, for your leadership, and particularly for women-owned businesses. We're very grateful. And good luck to you in your future. Thank you. I'll yield back.
Ranking Member Velasquez.
Yes. Administrator, you heard almost members from both sides how much we care about the stability and continuity and the contribution that SBDCs do. It's a network that has helped us, and as we all know, the economy is still fragile, and in order for us to get small businesses do better, SBDCs play an important role. So when people question the fact that there are new programs that have not been authorized by us, and yet they're getting funding and you're cutting SBDCs, that really creates concern. And yes, they were cut by $10 million based on your own submission. I heard that you said before that they were not. That is not $10 million. Look, you have the numbers, I have the numbers, so let's move to the next question. You answered to Ms. Chu regarding the fact that you choose to reduce the fee rather than interest rate, and you said that you cannot do that. Is that correct?
I believe what I said to Ms. Chu is that we set the fees, the banks set the interest rates.
You set the interest rate, and this is, I have Chapter 4 of 7A, the statute, and say, notwithstanding the provisions of the Constitution of any state, limiting the rate or amount of interest rate may be charged, taken, received, or reserved the maximum legal rate of interest on any financing made on a deferred basis pursuant to this subsection should not exceed a rate, but that doesn't preclude you from lowering the rate. And I just want for the record to reflect that.
Well, let me absolutely get back to you, but my understanding of that provision is that that is a cap.
It's a cap, but what it's saying, it doesn't preclude, it doesn't say that you cannot lower the rate. It says that you cannot exceed.
Right. It says that we cannot guarantee any bank rate that exceeds that rate. But we're happy to have the conversation.
Her question was, why do you choose to reduce the fee rather than lowering the interest rate? Your answer basically contradicts the statute. That's my point. You know that for so many years, as a member of this committee, I have been concerned about the integrity of the Hubzone program. And at my request, the GAO conducted 3 investigations. And basically those follow-up showed that the program is rigged with fraud, abuse, and mismanagement. So my question to you is, given that and the fact that GAO has repeatedly recommended that SBA perform unannounced site visits before a firm becomes Hubzone certified, and that the site visits has been proven to be an effective method of oversight, yet your budget outlines plans to reduce the number of site visits to 500. So why are you reducing the agency's commitment to this proven fraud prevention tool?
When I first came to this agency, fraud, waste, and abuse was a real issue. And we stepped right in, and we delivered a 3-part program going after fraud, waste, and abuse. And I think you'll agree it's been pretty effective. One component of that was upfront eligibility. The second component was site visits and ongoing monitoring. The third program was going after bad actors and enforcement.
How many of those bad actors that were shown to defraud have been fined?
Many, many have been eliminated from the program. So we now have a much more viable screen on the front. We will submit. We'd be happy to submit to the committee. But we now have a very effective upfront screen on eligibility that we did not have at the time. We are happy to go over with you what we are doing on the Hub Zone program, but the Hub Zone program, as you know, is very, very important to us, and the integrity of that Hub Zone program, as you correctly pointed out day one, needed attention. We provided attention. We will continue to provide attention to make sure that anybody who is not a Hub Zone is not in that program.
I hope that the next time that I ask the GAO to conduct another investigation, that you prove to be right. Because, as you know, for many years now, we have been in this predicament. And to go from 1,050 visits to reduce to almost half of them, I hope that you're right and that what you're doing is effective and that you're protecting taxpayers' money. With that, I thank the Chairman for you.
Thank you, Mr. Chairman. Ms. Mills, and I'm sorry, I should have actually had staff dig this out before getting here. When you look at sort of the guarantee portfolio, particularly those with a couple years on them, where are you seeing claims? Where are we seeing impairment? Just help me understand, is there geographic separations? Is there category of business, program separations? Where do you see both problematic and where are you surprised at performance?
We track very carefully loan impairments and defaults. And interestingly, the cohorts that were the most problematic were the 2005, 2006, and 2007 cohorts.
Okay.
And largely, the problem is in commercial real estate, particularly in the 504 portfolio, which relies heavily on commercial real estate. Those inflated values did not prove to hold up through the recession, and that created losses in those cohorts, which have largely moved through the 7A portfolio, which is the reason the subsidy is down to zero, and are moving through the 504 portfolio as well. So that portfolio will improve.
And specifically on that, and just to make sure I'm understanding it correct, so this is sort of an education of me. The individual lender is our servicer for that lender. Does, in those occasions, you have an interest in the underlying real estate, so would do the foreclosure there. And so they act as the process, and at the end, the shortage is where the claim is made to you?
We have a multi-pronged effort to go after taxpayer money. So first, the servicer or the CDC will go after it. Then we will go after it, and we have a multi-pronged effort to go after the money. We really try not to leave a penny of taxpayer money outstanding.
And I just had because one aside on that was, I understand the underlying real estate, you have an interest there, and I didn't know if also in that type of loan you have a right to go after personal properties that would be within the business.
We take lots of collateral, all collateral, but in the case of 504, it's a second lien.
Okay, so you're in a secondary position. So in that case, you're particularly in real estate, you've been substantially wiped out.
Well, we have substantial recoveries. It depends.
When you say depends, can you tell me, help me understand sort of what the numbers are?
Yes, we'd be happy to talk to you about the recoveries in the portfolio and whatever.
What I'm trying to understand is also recovery on the underlying real estate and recovery within the personal property, the machine equipment, things that would be done on a bill of sale, and your process for doing that. It's somewhat of an academic question on how some of the small SBA representing lenders are modeling and helping you get there. So, a second question, some of the mentoring programs, unlike some of the previous discussion, I'm from an urban-suburban district. And I've often had a concern on some of the mentoring programs because I find there seems to be dozens of them, at least in my community, those offered through the community college, through the university, through business groups, through trade associations. When is there enough within the community to make it so we're just becoming somewhat repetitive?
Well, as you mentioned, one of the things that we have done is really what I call link, leverage, and align our SBA partners and our other federal partners, and very often community colleges, mayor's offices, local economic development, in order to make sure that a small business can navigate to that resource that will be right for them. So if they want mentoring in exports, how to grow their business, they would go to one place. If they want to start a new business, the right place would be SCORE.
What if you're in a community that actually has a fairly robust both private sector, nonprofit sector infrastructure to provide these? Is that an indication where in your organization you're able to move resources to a member's rural district, or those of you in Maine, or I'm curious if you have the ability to sort of make those strategic decisions on directing the resources.
To specifically answer your question, in some cases, no, in some cases, yes. But you have to understand that in areas that are urban, there may be a lot of programs, but there is a lot of demand, and a lot of demand for different kinds of services that may look the same, but for an entrepreneur, a high-growth entrepreneur, they need an accelerator. For a new Main Street startup, they need a SCORE representative. What we've been able to do with our new website and with our linked, leveraged, and aligned resource partners is navigate that person to the help they need. If they walk into a SCORE office and they need Small Business Development Center, we can send them there.
And Mr. Chairman, I appreciate your patience. I know I'm over time. And my concern is obviously I need to now hop on the website and do a little digging around. Does it actually direct you saying this is a organization provides this service? Oh, by the way, we have no association with government dollars. We're funded by the community or by our participants, and it seems amazingly duplicative, some of the meetings I go to and the number of resources that are there. So, thank you, Mr. Chairman.
Thank you, Mr. Chairman. Ms. Mills, thank you for your service to the government and the people of the United States. And yeah, I don't want to beat a dead horse, but I guess I'm going to beat it one more time. In terms of the SBDCs and the work that they've done that has been stellar in some areas. The GAO even last year cited the program as best practices model in terms of the rate of return on investment, among other things. But yet and still, on both sides, it's been raised to $10 million in cuts that we see for the centers. And I need to understand, under sequestration, there was a 5% across-the-board cut, but it appears the centers received an 8% cut, and I need to understand why that is.
Well, let me come back to the Small Business Development Centers and once again say that we believe our Small Business Development Centers are an absolutely critical part of our resource partner network. They are highly valued. They are going to receive incremental funding from a multiple of different programs that reflect the priorities of the job creation numbers. So we are very much working in partnership with our Small Business Development Centers. We have to, in sequestration, make a number of very difficult choices, including cuts to resource partners that we wish we didn't cut.
Okay, but if the number is 5, how do we determine 8 in that area?
Well, we're happy. Tomorrow we are going to reveal our sequestration plan. So I'm happy to go over that with you with those specific numbers and the rationale for each one. That will come out tomorrow.
Okay, and you know the SBDCs were even helpful in Sandy relief efforts, and although they're receiving specific Sandy assistance dollars, you know my concern is still, you know, with that 8% cut in sequestration, and we're hoping that the Sandy money will be used to supplement and not supplant dollars for those programs. Let me just also, you know, women's business centers were mentioned, the HUBS program was mentioned. Let's see, you know, the administration's focus sounds great, but can you explain how you have prioritized, you know, support for small and disadvantaged businesses? You know, you've requested cuts for funding to the HUBS One Zone program, women's business centers, veterans business outreach centers, Native American outreach, and eliminates the PRIME program. Can you outline your efforts to support disadvantaged and minority-owned businesses?
Well, as you know, our job at the SBA is to fill gaps in the market. And the biggest gap in the market is really in underserved areas. And this is where our 7A loan program is 3 to 5 times more likely to support a loan to a woman or minority-owned business than a conventional lender. In our 8A program, it's for socially and economically disadvantaged small businesses. And across really the entire SBA effort, we have had a focus on the underserved market. We have a council, an underserved communities that advises us on where those gaps exist, and then we tailor our efforts to make sure that if the market is providing service to a community, we will focus on the places where there are gaps in the market.
So based on that and the cuts that are going to happen in all of these programs, that has been the information and recommendations you found?
Well, we're in a situation in this budget where we have to do more with less, and we are tightening our belts. We're cutting all across the agency. We're eliminating waste, and we are forced to take cuts in the sequestration, and we are going to be determined to make sure every dollar we can goes against small businesses, with particular emphasis on small businesses in the underserved community that don't have access and opportunity. That's our job.
Thank you, Mr. Chairman. I'll yield back.
Mr. Luke DeMar.
Thank you, Mr. Chair, and thank you, Ms. Mills, for your service. I know you've been busy the last 4 years. Just to follow up on some of when you're the last questioner of the day here, or second last, you wind up with leftovers here. So we've got a few little items I just want to kind of go back, touch on, and just kind of clarify my own mind. With regards to the fee structure on loans, because of the success of the program, apparently you're able to drop the fees on those loans under $150,000. Is that correct?
Yes.
And I guess my question is, why are you doing that versus just lowering the fees across the board for all of the loans? It would seem that there'd be an economic benefit that's being had by those larger borrowers over the smaller borrowers.
When I came into this job 4 years ago, loan volume had just frozen, and we were able to raise the guarantees and eliminate the fees, and that created a sharp recovery in our loan volumes. In fact, we had 2 record years. But when you parse the numbers out, the large loans above $150,000 have recovered. Under $150,000, they dropped from 79,000 loans to 27,000, and they have remained at that level since 2009. So we know that the small dollar loans, the banks aren't making them. And we need to make sure we push on the demand side and on the supply side, and that's what this fee reduction program will do.
Well, you know, our staff did a quick review of the fee that you're talking about, and a $100,000 loan, it would amount to $38 a month. With all due respect, Director, that's not going to encourage somebody to take out a loan under $150,000 versus not take out a loan. Let's be honest here. The reason the loans in that category have frozen or have dropped is because of the demand. You can't tell me banks aren't out there. They've got all kinds of capital, all kinds of money to loan out right now, and a fee of $38 a month is going to make the difference between loaning it and not loaning it?
Well, I respectfully have to say that our data differs.
Well, okay, I'll move on, but I certainly would, I don't, well, anyway. Very quickly, with regards to some of the other issues here that we have, the disaster loan program. We've had some disasters over the last several years, and I'm just kind of curious about the amount of money that's in the disaster program and the past dues that are in the program, how that's faring. What do you see in the disaster program versus other programs comparatively? And obviously, the recent disasters we've had, those folks haven't had loans long enough, or even maybe not even in the hopper yet, to even be part of this the question. But I'm sure we've had, over the last several years, we've had all kinds of problems.
Well, first of all, I'm happy to say that our disaster operation has actually been completely transformed since Hurricane Katrina, and we have built the capacity to come in and serve in these disasters. And I know this isn't specifically your question, but I just want to take the chance to tell you we have 2,000 ready reserve. We only had 880 staff during Katrina. And during Katrina, we didn't have enough seats. We had 366 seats to process those loans. Now we have 2,100, and let me tell you, every single one of them was filled during Hurricane Sandy. We just finished processing $2.2 billion of loans. It's the third largest disaster in the history.
Okay, my time is limited. I appreciate the education on that, but my question is, how are these loans performing?
Well, disaster loans are performing at about the standard that they always have.
Okay. Right quick before my time runs out here, with regards to sequestration, have you reduced your employee numbers at all as a result of sequestration? And if so, how much?
Yes, we instituted an employee freeze of 5% of our vacant FTEs, and the reason that we did not have to do furloughs or layoffs is that a year ago at this time, we did a voluntary force reduction that added up to about 200 people, and those
a voluntary forced reduction. Explain that to me.
Yes, it's called a Vera VSIP, and we offered early retirement.
Okay.
At the SBA, we have a very retirement-ready team, and we are bringing in the next generation.
Okay.
So as we were
That's
moving,
a nice way to say you have an aging population that you've employed. Is that right?
and we were rehiring. We're in the process of rehiring, and instead of rehiring up to our limit, we reduced our limit down.
Okay, so basically you've done it through attrition.
So we did.
Through retirement program and attrition.
It happened that we had this early retirement program, and
all right.
we were
very good. Thank you very
not
much.
rehired.
Thank you, Mr. Chairman.
Thank you. Question I have: if your agency had to take another 2% cut, do you know where you'd take that from?
Well, Mr. Chairman, I have to tell you it would be very difficult because we have really, over the last 4 years, taken every dollar that we have that doesn't touch a small business and streamlined, simplified, reduced waste in order to get that dollar in a place that would help small businesses. And right now, as you've heard from others, we really can use there are lots of small businesses out there that need our help, and we're providing it as effectively as we can. So we are tightening our belt. We will continue to do process improvement, and if we turn up an extra dollar, it will go right out into the field or someplace in a program that touches a small business.
Because it's definitely possible. You know, we could see more cuts, and it's something we have to think about. Too. Any other questions? With that, I'd like to thank Administrator Mills one last time for coming before the committee. It's been a pleasure working with you over the last 4 years, and I wish the very best of luck in whatever it is that you intend to do. We have, you want to go ahead and make a statement? One more. Go ahead, Ms. Clark.
I thank you for your indulgence, Mr. Chairman. As always, you're dividing your time among so many different committee hearings and meetings, but I'm glad I had an opportunity to just come in and to greet you this afternoon, Administrator Mills. Just want to quickly ask you a couple of questions. I know we're going to be saying farewell to you shortly, but I want to make sure that we have a basis on which to build from all that you have been able to accomplish during your tenure. And I'm going to preface this first question by stating that I understand that the SBA, along with the rest of the federal government, were required to make cuts. And as a result of the very ill-advised sequester legislation that is in place right now. That said, I'm having a little bit of a hard time understanding the disproportionate cuts to a couple of programs. Programs like the SBDCs and SCORE, while creating new technical assistance programs with similar mandates. Can you just give us some insight into your thinking about why you saw the necessity to do that and to create the new programs, and why cut programs that weren't broken to create new ones? As far as I can understand, doesn't seem like it was a request of anyone, but give us a sense of, the direction you're heading.
Well, first of all, Congresswoman, it's great to see you, and thank you again for your partnership over all this time. I'm happy to come and also provide a longer explanation, but briefly, because I know we talked about this earlier. This is not an either-or. It's a both-and. We believe in our small business development centers, our SCORE partners, our resource partners, and we know what creates jobs. So we need to layer on programs that work through. They're not new bricks and mortar programs. They're programs that work through and optimize new efforts delivered by our small business development centers and others, such as our intensive entrepreneurial education program. Be happy to come take you through how that fills a gap in the marketplace, does not duplicate other activity now provided by the small business development centers.
Just sort of give me a sense of the mechanics then, because for the SBDCs, they were cut by 8.6%. SCORE was cut by 6.8%. That's like $10 million for, a program that wasn't like robustly funded to begin with. So is this an overlay on the missions that those organizations already have, the intensive piece you were talking about?
As I mentioned earlier, the intensive entrepreneurship education experience delivered by the proposed program is a proven program. It exists today in 27 cities. We have metrics on it. It exists with Goldman Sachs, 10,000 small businesses. It exists in Fast Track. We are taking this program, making sure it is delivered through our resource partners as it is today. The same is true of our Boots to Business program, which is for returning veterans, providing them a pathway to entrepreneurship. And as I said, we would be delighted to have you come visit one of the graduations or one of the classes of the E200 so you can see how the small business development centers are integral to their delivery.
Oh, okay. So essentially the programs are run through the SBDCs?
That is absolutely the intention and the practice.
Okay. And then with SCORE, are we phasing SCORE out, or is that just another component
SCORE is a very important component. SCORE does, as you know, one-on-one mentoring.
Yes.
Small business development centers do classes, individual classes, and long-term counseling. This 9-month entrepreneurship program, intensive mini MBA, is geared to those mid-sized small companies able to take the time and energy to move to the next level, providing the skills for that owner-entrepreneur to be successful.
Okay, so it's really a hands-on sort of let's take you to the next level, and that's something that you feel the SBDCs didn't really have within their bailiwick prior to the creation of the program?
It does not exist currently in the SBDC world of individual classes and long-term counseling, which, by the way, is very valuable and very much a part of the SBA's core activity.
Well, Administrator Mills, I hope that we can get together before your departure, and I want to thank you for all of your commitment to the small businesses of our nation, and wish you all the best in all of your future endeavors.
Thank you.
Thank you, Mr. Chairman. I yield back.
Absolutely, and again, thank you for all the work you've done. And again, it was a pleasure to work with you the last 4 years.
Thank you, Mr. Chairman.
And with that, I'd ask unanimous consent that all members have 5 legislative days to submit statements and supporting materials for the record. And without objection, that's so ordered. And with that, the hearing's adjourned.